Dan Downs, welcome back to the channel. Thanks for making the time again. Last time we spoke about the digital transformation at a very high level for some of these smaller mutual banks, the credit unions and whatnot. And since then, we've been talking, I guess between us, and I sent you that. Where am I? I sent you that McFarlane quote that was in the paper about, here it is. So I'm just going to quote him directly here. We're saying his vision includes not paying bonuses, banks getting out of businesses that they have no distinctive advantage in, but above all, he says that the path to success means investing huge amounts of capital in technology. Comment?
Well, good morning, or is it good evening in Melbourne, Peter?
Well,
it's morning here.
Yeah, it's morning here too, but
morning here in San Francisco. But good to see you again.
I like the night.
I think McFarland is saying what nobody wants to hear, which is you've got away with probably the last 20 or 30 years of not investing enough in infrastructure, enough in your non-human resources, let's say, and too much in branches, and it's coming back to bite you. And the COVID has just accelerated that by probably anywhere from 5 to 10 years, and it's tough. It's tough now.
Yeah, I've been reading some stuff, about this transition where, so you've got a bunch of senior people who are of that baby boomer generation, and so they've still got the mindset of that baby boomer generation, and they're accommodating the baby boomer generation, but they don't make money out of the baby boomer generation. They're going to make money out of the biggest cohort of a market since the baby boomers, which is the millennials, the Gen Ys, right? So they're all starting to get into their careers now, buy houses, invest, need loans, need credit cards, and all that sort of stuff. But they work very, very comfortably off their phones and off technology, and so that's the drag, right? So you're relying on a business model that's outdated. And that investment, I guess, is really what I want to talk about today. How would you sort of create a word picture on how you would layer that investment, in terms of the customer facing stuff, the operational stuff, and then maybe the back end sort of conversation, and also maybe we'd talk, maybe if not today, but another time around the security aspects.
Yeah, thanks, Peter. Look, I think the Gen Z as well. Gen Z knows nothing but mobile, and wouldn't ever consider an internet, browser login. In fact, I remember I read a paper a few years ago. Somebody wrote about the bank manager's children would never go into a branch. That was a well-written article, and I think very, fairly good foresight into the future. And that's, I think, the big, when all is said and done, when people look back on this era, they're going to say, why'd you spend so much money on branches, on a retail environment? And COVID's just proven that. You don't need branches to make banks work. And people have been saying that for years, but nobody's acted on it. And I think that's going to be an indictment on that era. Yeah. And what you did is the baby boomers that grew up with that, nothing else, and it's that classic what's come to be known as the Kodak moment, that people are sitting there going, well, there's nothing wrong with our model, it works, it's worked for 150 300 years, however many years, we've always had branches, and then boom, one day you don't have a branch and you're dead.
So is that how much of an impact or factor is the fact that obviously less and less of our economy is cash? So I don't carry cash anymore, pretty well zero. Like if it happens, it's been forced on me. Like I had to get a refund the other day and they wanted to give it to me in cash. And I went, fine, but I don't carry cash.
Hmm.
My ex-wife will sign a check. She's younger than me, right? But again, we're into our 50s, right? So, but how much of a factor is their thinking, or is there the I guess the industry or the market thinking that cash is has a bigger part to play than it actually does?
I think once again, this pandemic has proven that what you just said is that cash is not required, especially in Australia, and especially retail in Australia. Everyone's got the devices, POS devices,
Right.
and in fact, the local coffee shop actually refuses to take cash. They're concerned about germs and what have you, but reality is it's just easier for them. They don't have to go to the bank, and that's being you're seeing that the big banks are closing branches now. They're what did I read? 1 in 3 branches don't even have cash facilities. So I think cash is moving very quickly to be kind of like the
redundant.
checks.
Yeah, that's right. So let's talk a bit more about sort of that sort of layering type approach. So if I was the operations officer or the CFO of a maybe a $2 billion funds under management type credit union bank, or so relatively small. I think that's small. What are the things that I need to be thinking about? What would you kind of lead in with to start to frame my thinking?
And I think you got to start with, and it really doesn't matter what size you are. You got to start with your current state and assess almost like a benchmark across a number of different metrics. Well, not almost. It is a benchmark across a number of different metrics, and say, are we competitive? Do we even keep up? And can we lead? And you could probably come up with, not probably, we know there's a 10 or 15 criteria in running a financial institution. But first and foremost is that the board and management got to be on side with this, and they've got to. I think they need facts to help them understand. Wow, we don't have a very good internet banking. We don't have an app, or our app's out of date. But how do you prove that your app's out of date? Well, you got to benchmark it against the industry. Where's our cybersecurity at?
I would imagine that you could take the approach and say, we're going to reform our business and create, we'll buy an app and we'll plug it into our system, and we'll buy a customer onboarding module and plug it into our system. So basically, you've got this transition process. Or, and if I was sitting at the helm, I think, well, do we sort of keep the current state and look after the customers that we've got, but actually set up a strategic business unit from scratch with a new brand, with a new sort of look at, and really just tap into the back end of our banking service and really go to market with a whole new business model? Have you sort of seen?
And that's happening, Peter, and you're very accurate. Cascal, which is obviously payments for the credit union sector and beyond, they set up a separate entity to do digital banking, and they call it 86400. Now, I think if you read the CEO's playbook there, they want to white label that service offering for other financial institutions. So you can keep your core, but the expression is hollow out the core. At 86400 gives you a prescriptive, if you will, of like you said, probably 15 other. It's a complete stack, if you will, and includes like loans origination, security, an app, the entire CRM, the things that you need to go to market in a digital way. So back to your premise, which I also think is probably the only it's probably your only option, which is it's gonna be scary, but is to do exactly what you said, start up a digital offering.
So I've got a neobank too, sort of thing. So I'm teachers credit union or something, but I've got a neobank too for the younger teachers.
And that's tough, isn't it? And that's why this is not an easy challenge. But if you didn't start 5 years ago, you'd almost say, "Oops,
yeah,
too late now."
Well,
you're asleep at the wheel, kind of thing.
So my other options. Okay, so I could do reform my current business. I can set up a strategic business unit and plug and sort of try just have a go to market around branding and messaging the right millennials to get them onto my system. And I guess my old business depreciates as people sort of pass on and move on, and my new business will increase. And then that's one transformational type approach. What about merging? Again, what are the technological challenges of merging to sort of provide, because obviously these are costly exercises. They burn through time and they burn through money. If you merge two organizations, just say it's quite simple. It's just two organizations you're merging. What are the options there? Like, particularly if they're servicing different markets.
You're talking, I guess, about the elephant in the room, really. People like myself have been advocating this for some time, that one plus one doesn't even equal two, but at least it equals a chance to survive. But
right.
if you're really small, look, there's the Bendigo Bank option where you basically use their back office and you keep your branding in the front end, and a few smaller FIs have, I think there's 5 or 6 that have gone that route. So they basically have given up responsibility and outsourced it, if you will, to Bendigo Bank, and probably not a bad way to go. Bendigo Bank takes over their book and takes the risk, if you will, of their both.
Who was that? Who did that? Who did that?
There's a few. There's smaller credit unions that did that.
So they were virtually not worth running. They couldn't really keep their black line above their red line, and just thought, well, we'll do that. We'll just focus on customer facing.
So the statistics, I just looked it up the other day. Cost of income in the well-run credit union, it's somewhere between 82% and 75%. So your possible profit margin 18%. At
right.
best. Cost to income ratio. Sorry. The big banks are at 45%, and the digital banks are at 20%. You just got to do the math on that and work out that. And especially with interest rates now, what's your best go to market? It's at about 2%. So you've really got nowhere to move, and we don't see, nobody's forecasting interest rates going up in the next 3 to 5 years. Now that could change, but right now it doesn't look like it. So how do you make money?
Well, that's a key question. And so if tech is offering, the technological transformation is offering a better form factor for the right market, and a decrease in the cost of carrying, like the operational cost of the business, is that right? Then you're talking about the business model and how technology can actually help from a business model point of view. So what are the options there?
Well, again, it's back to what you said, isn't it? I mean, look, if you got a fair investment in branches and people and old infrastructure and old systems, what do you do? You can't write that off just overnight, and so you
You can if you
as
do
a
it. If
farmer.
you do it next financial year, apparently in Australia, isn't it? You can write 100% off your assets.
Good point. Good point. So you take what everyone's been doing, other than the leaders, you slowly let it wind away, and you're uncompetitive, and you basically service your base,
Yeah.
service your community. There's something to be said. There's definitely something to be said for community banking, and definitely in the certain geographic centers. There's a history with that and the community, and that's a wonderful thing. And you don't necessarily want that to go away, but you bulk of the
I'm just had a thought. So, and this might be like completely lame, so I'll edit it out if you laugh at me. But it seems to me that the way the world is going back to self-sovereignty. So, more people are buying gold and silver and Bitcoin, and they're saying, I don't know what's going to happen in the world. There's all this uncertainty. So I'm going to de-debt. So that's bad for the banks. I'm going to hold my own hard assets. So that's bad for the banks, right? Unless they're buying a house, right? I'm going to pay down my mortgage. I'm not going to buy that new car this year or release that new car, and I'm moving back into this. So self-sovereignty is really where banks started, right? So if you go back to the Wild West, and you had, the baker set up and the fucking butcher set up and whatever, the banker rocked up with a big vault and said, when you're bringing your gold out of the hills with your donkey, I'll put it in there and I'll give you a piece of paper, and you can, you got a receipt and you want to go cash that receipt in and buy some paint and buy some potatoes or whatever it is you want to build.
Yeah, so, you're gonna edit this, but you're gonna edit this out,
I think. Maybe, but I'm just wondering. So could banks go back to providing safe storage of hard assets?
Well, that's an interesting question, because what you're then saying is, do we repurpose our assets, which is our branches and our vaults, to use them to be a place to store things? Is that what you're saying?
Yeah. So I'm saying, okay. So I've got gold, I've got silver, I've got, maybe I've got some hardware wallets for my crypto assets or whatever. I want to keep them somewhere safe, secured, insured, and I can use them as collateral to then leverage against to enter into other financial contracts. So whether it's I want to invest in something, I want to underwrite something, I want to borrow against it, or whatever it is. So maybe the business model needs to be rethought.
Yeah, I actually think that's not a bad idea. I think, well, the next question is, how many people hold gold or hold silver? Well, as you say, that's actually
a lot of people are moving into hard assets. I know that for a fact. Certainly a percentage into the digital assets, but there is a lot of paying down of debt and socking away money, because obviously by pumping money into the economy, the way the Fed is in the United States, so because I'm not just thinking about Australia, I'm just thinking about more globally. Yeah. But also we're pumping money into the economy with quantitative easing and, helicopter money and all that sort of stuff, hitting the account. That is debasing our dollar. That is eroding the value of our dollar, as is, the Americans inevitably are going to hit a wall with this stuff. So people quite rationally are moving out of cash. It's laughable, the sort of interest rates that you'll get if you tie up money with a bank. It's just a joke, right? So even CPI is not going to, even if CPI is 1%, you're still going to be behind, right? Yeah. You're still losing value of your money. So if you've got anything significant or substantial that you want to protect, people are moving into hard assets. So I would say to you, not only are the millennials behaving differently at the front end, but the business model at the back end, the value proposition needs to be rethought. Because, as a banker, if you were my banker, I'd say to you, where is the value you're offering now? Like, other than a payment portal and a way for me to look at my balance. So I know that I've got $1,000 there. I'm going to pay a $100 food bill, and I know that the money's going to hit the account, and away you go. And, you know, Pay ID is fantastic because I can drop $10 or $20 into my kid's account when he needs it, you know. So all those services, but I don't think they make money out of that. Pay ID, they're not making money out of.
No.
But I'm making money out of showing me my balance, and I'm making money out of giving me an app, and I'm making money out of, so they're making money out of payments, but who's making money? MasterCard and Visa card, right?
I think if you look at the smaller community banks that have been around for the 25, 30 years, the issue for them is they are what they are, and they're never going to, you know, let's be blunt, they're never going to be digital banks. So I think they're going to serve a purpose for the community that if they can clearly define their community, and they'll continue to community hub. They have to change their back office and at least reduce their costs or minimize their costs as much as they can. But they're not going to be big, and they're not going to grow. Right,
but are they going to be profitable?
Well, and probably not that either. They're going to run down their books, and they're going to, you know, it's going to be like let's be blunt, and it's going to be a bit like the RSL. They're
right.
Gonna, you know, I know you're a past serving member of Australian Armed Forces. I'm not being anywhere negative about that. I'm just saying that if you go to an RSL these days, it's kind of run down, and it's not.
Oh, it's terrible.
It doesn't.
So they're still serving the World War II and Korean veterans. They're not even,
correct.
Maybe
Correct.
The Vietnam veterans, but that's kind of, you know, the new guys.
Yeah.
We wouldn't even go in there, you know. You know, I'm actually a member of the local RSL. I think it's been over a year since I've been down there.
Yeah. My point exactly. Although the beer is cheap, so maybe you should go there.
I try not to drink too much beer.
But what's my point being is that there's always going to be a small rump of older demographic that like the community, you know, firefighters or whatever it is, branch, and they're happy to go in there and chat and whatever. Are they going to make money? No. Are they going to be state of the art? No. But those people do exist, and they need someone to look after them.
For sure.
If you're happy to be that, you know, to be that RSL in the banking world, then okay, it's cool, but you're going to be a very low percentage of the population.
Yeah. So that's where I think, and I've read some stuff about this, so I think you're right, where banks, some banks at least, will go to the edges of the financial community instead of being at the center of the financial community. They're going to become like a cottage industry. You know, they're just really servicing their local community and their, you know, mum and dad type sort of operations. So, yeah. All right.
And well, here's an interesting. Just let me. So the interesting thing is the new banks are serving communities in a similar fashion, but it's a different community. So it's the community of millennials, and it's a community that they I don't know, they work from home. They don't want to go out to a branch because they don't leave their fucking house. So why would they go to a branch? They're going to do it all on their mobile phone because that's their world. That's who they are.
But why get in line and wait for somebody to stamp something for you when you can?
Because I'm filling a form. Oh yeah, let's do that. You already got all my details, but no, let me do the forms again. You know, like, can you just imagine, you know, you're 20 years old, you don't fill in forms.
Well, that's right. I was trying to apply for a credit card, just like a personal one for, you know, just for sort of day-to-day sort of stuff. And honestly, the only reason it's sitting right here. But the only reason I didn't do it after I got through the first onboarding piece was suddenly.
Which bank, Peter?
Yeah, exactly. But because suddenly I had to get all these artifacts and information, but they've got all my information. They've got everything. They've got all my transactions. They've got everything about me. Why am I giving you hard copy now or scanned copies of more information, which is just going to chew up 2 or 3 hours of my time? Yeah. And I may or may not get it anyway. Like you know. So yeah. Hey, I'm running out of time. I sort of end it here if that's okay. But maybe on the next session in a week or so, we talk about dig into the weeds a little bit around security and in its broader context, not in terms of ones and zeros, but it's in broader considerations that a CFO, a CEO of a bank would need to think about as he or she made this transition into the new digital world. Okay,
Very
well,
good,
thank
sir.
you. Thank you for your
Enjoy
time.
your evening. And
I will. Thanks, man. I'll talk to you later.
okay, bye.